Hello everyone, welcome to the Stock Trading Tutor channel. I'm Bernice and in this video we'll be talking about the RSI indicator, that is the Relative Strength Index indicator. So let's go into the topic. So what is the RSI indicator? The Relative Strength Index or the RSI is a momentum indicator that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, that is a line graph that moves between two extremes and can have a reading from 0 to 100. So here from this we can understand that RSI is an oscillator. So there will be a level from 0 to 100 and it will move only between these two lines. And there will be two extremes which are 30 and 70. When it crosses between these extremes, we can get a reading. So let's look at it in an actual chart. So this is a chart example of how it will look when we apply it on a candlestick chart. So this is a one-day chart of the stock Yes Bank in the NSE National Stock Exchange. So we have applied the RSI indicator and we have used the most common period which is used, that is 14. And if we use this indicator, it will come below the chart and we have the 70 to 30 areas shaded in this purplish color. So, and this is the RSI indicator line. We can see it's moving above and below, showing whether this is here it is overbought, and when it goes down here it is oversold. So this is how it is used for generating signals for the stocks. So RSI is a popular momentum oscillator developed in 1978. It indicates when the momentum is slowing down or picking up steam by comparing to the previous momentum. So the relative strength index compares bullish and bearish price momentum plotted against the graph of an asset's price. So signals are considered overbought when the indicator is above 70% and oversold when the indicator is below 30%. So here we have when it is above the 70 levels as which is marked here, this is an overbought signal. So as we can see in the stock chart itself, the stock is in an upward movement and here it reaches a small high. So this is considered to be the stock is overbought. And here when it goes down in this right corner here, we can see that the stock is in a downward bearish trend and it has crossed the 30 mark and gone below. So this is oversold. The stock at this specific time period is very oversold. So let's see how to calculate the relative strength index. So here we have the formula given, that is 100 minus 100 by 1 plus RS. So RS here is the relative strength and this is calculated by the average closing price of the up closes by the average closing price of the down closes. So let's look at that properly. So the formula is for the relative strength is average gain divided by average loss. So the momentum is the velocity and the magnitude of the price rise and the falls. So it considers only the velocity and the magnitude. The standard is to use 14 periods to calculate the initial RSI value. So when we are using a specific time frame, it is only for 14 periods. So here we have the relative strength, which is given by average gain divided by average loss. And then we have the RSI, that is relative strength index, and in that we have 100 minus 100 by 1 plus RS. So when we apply the RS formula also in it, this is what the relative strength index will look like. Here's the equation of it. So this is the Sensex chart and this is a daily chart. One day candlestick is formed here and with the RSI 14 periods applied. So here we can see Sensex in this specific time frame that we're looking at right now is the index is currently is in the over, it's going overbought. It has crossed over the overbought levels in the right end. So many investors will apply a horizontal trend line that is between 30% or 70% when a strong trend is in place to better identify the extremes. So modifying the overbought or the oversold levels when the price of a stock or asset is in long-term horizontal channel is usually unnecessary. A related concept to using the overbought or oversold levels appropriate to the trend is to focus on trading signals and techniques that conform to the trend. In other words, using bullish signals when the price is in a bullish trend and bearish signals when the stock is in a bearish trend will help to avoid the many false alarms that RSI can generate. So, since RSI is a momentum oscillator and it just measures the momentum and the velocity and the magnitude of the price movement. So, here we can see this is a range bound, and sometimes the RSI indicator can generate a lot of false signals. So, when it is an upward trend, you can use bullish signals. So, to look at this, using bullish signals when the price is in a bullish trend, and you can use bearish signals when the stock is in a bearish trend. So, this will help you avoid the false alarms that RSI can generate. So let's also look at some of the limitations of the RSI indicator before we go, because generally RSI indicator is used along with other indicators. So in the upcoming videos, we'll also show which indicators you can pair along with the relative strength index so that you can get very reliable signals. So before we do that, let's look at the limitations of the RSI indicator. First, like most technical indicators, its signals are most reliable when they conform to the long-term trend. True reversal signals are rare and can be difficult to separate from the false alarms. A false positive, for example, would be a bullish crossover followed by a sudden decline in a stock. A false negative would be a situation when there's a bearish crossover yet the stock accelerated suddenly upwards. Since the indicator displays momentum, as long as an asset's price momentum remains strong, that is up or down, the indicator can stay in an overbought or oversold territory for a long periods of time. Therefore, the RSI is most trustworthy in an oscillating market when the price is alternating between bullish and bearish trends. So, as we can see, this is the best moment when you can use the RSI indicator. So the best market is when the market is oscillating and the price is alternating between bullish and bearish trends. In a sideways market, it's not that good to use the RSI indicator. So thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. For more videos, especially on RSI and the other indicators, please subscribe to this channel so you can stay updated. Click the bell icon on the right side of the subscribe button to be notified when we post new videos.